Wall Street doesn't do anything. They don't get paid first. And quite frankly, there's no other people involved with investments on the planet who don't get paid first except for us silly little old real estate investors. So when I looked at the model of traditional real estate investing that I was taught, like literally everybody listening right now, like everybody's going to be at the conference in Michigan, I realized that it was a highly flawed model.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. Hello and welcome to episode 212. My guest today has over 35 years of investing experience, and he's personally completed more than 2,000 real estate deals, making hundreds of millions of dollars. He's a deal maker, teacher, and he walks the talk. And today, John Burley will be sharing some of his secrets of how he uses other people's money to do his deals, and how you too can become an expert in raising private money. Now, John is also going to be a featured speaker at the 2020 Michigan Landlord and Real Estate Investor Annual Conference and Expo right here in Grand Rapids, Michigan, next month, February 27th through 29th of 2020. And you can go to rpoaonline.org to find out more. John will be revealing the secrets of raising private money and the 7 simple steps anyone can follow to get money in your pocket now. You'll learn how to get paid up front, during, and at the end of the deal. And you'll also learn techniques to help you take control of your financial future using real estate. John, welcome to the show.
I'm excited to be here, Brian, and even more so looking forward to coming out to Grand Rapids in February.
Yeah, we're looking forward to having you. And I'm all about raising private money because that's something I do myself. So I've really been looking forward to this conversation, and I can't wait to see you and hear you speak live. I always start the show just asking our guests, how you got started investing in real estate. And I think I'm going to do the same with you. How'd you get started?
Yeah, I got started a long time ago. I was 18 years old. It was 1979. Interest rates were on their way to 19%. So it was quite a bit different game than today, but I learned some great lessons from it. I borrowed the Nothing Down book by Bob Allen from my dad. So I leveraged the No Down book, and I didn't keep track because I didn't think it ever mattered. But I made 15, 20 written offers for no money down, got a deal for no money down. My first deal, I got a check for $4,930 in the keys. I paid nothing and got paid to take the property, sold it for a $14,900 profit. And you'd think I was on the way, but maybe a lot of the listeners can relate to it. My experience was I did it, it made money, and rather than doing it again, I went around and talked to all my friends and family who were sure it wouldn't work to talk me out of it, even though I had done it. So 2.5 years later, I did my second deal. I made $28,000. About 3 years later, I did my third deal, and that one I made $101,000, and then moved into doing it full time and founding the private equity company. I struggled in the beginning. I think, like a lot of people, struggled with my own story, my own beliefs, taking a lot of advice from people who didn't do things. Kind of trying to figure out a way to fail without realizing that's what I was doing, which is what I see a lot of people do every day.
Yeah, well, let's kind of start with the basics here about private money. First of all, just for our listeners, explain what private money really is, and what are some of the misconceptions about raising private money?
Yeah, Brian, essentially, I look at it completely different from anybody I've ever heard speak on the subject of real estate. Completely different. I come from a background in financial planning. I'm out of the world of Wall Street. And I was a very, very high-end producer in that business. I formed my private equity company in 1989, which was literally 20 years before Wall Street went out. And what was unique about what we did is in Wall Street, Wall Street gets money. They've got their flaws. They got their bad apples. They've also got a lot of great people in the industry. And when they looked at money, they realized that what it was. So if you're a stockbroker, you don't sell stocks, you sell money. If you sell bonds, you don't sell bonds, you sell money. You don't sell insurance, you sell money. You don't sell futures, et cetera, et cetera, et cetera. Real estate is no different. And this is one thing where I get why it's there, but it's so primitive at times, our industry, because most people think real estate investing is about real estate when in fact it has absolutely nothing to do with real estate. I'll repeat, real estate investing has absolutely nothing to do with real estate. Real estate investing is like any other security instrument. It is entirely about money and nothing else. And so when I looked at the real estate and I came in and we went very, very large. First 2 years, we bought and held over 400 properties. We are almost entirely long-term holds. Most properties we hold for 10 to 20 plus years. The single family home was designed to be a long-term product, not a short-term product. You can make money on it in a short-term basis, but that was not the intention of the instrument. The instrument was designed for long-term to maximize the money, and I always want to maximize profits at all times. Yeah, the background I had in Wall Street, on the money side, Brian, was that Wall Street doesn't do anything. They don't get paid first. And quite frankly, there's no other people involved with investments on the planet who don't get paid first, except for us silly little old real estate investors. See, everybody else, you buy a mutual fund, they get paid. You buy stock, they get paid. You buy insurance, they get paid. You use a realtor, they get paid. You go to a CPA, they get paid. Everybody else gets paid first, except for the silly little old real estate investor. So when I looked at the model of traditional real estate investing that I was taught, like literally everybody listening right now, like everybody's going to be at the conference in Michigan, I realized after a very short period of time that it was a highly flawed model. It was like we were all taught to put the cart before the horse, but we all know the horse goes before the cart. So to do real estate, you either need money or you need somebody who can sign for a loan. You got to sign for a loan yourself. To really do it on any sort of volume basis, you have to have money. So I was just like, let's stop pretending that we don't need money. Let's put the pink elephant on the table and let's just say, hey, look, we need money. So rather than do what I was taught to do, which virtually everybody was taught to do, go make a ton of written offers with no money. And hey, when you get a deal, kid, the money will just show up. Well, that's not how it works in the real world. Sometimes. But I don't like sometimes on my deals. I like every time. And so what I learned to do from my background in Wall Street is we raised the money for the deals before we ever looked for a deal. We don't go look for deals unless we already have money, and we have money at all times at this point in our careers and have for quite a long time now. And so what we teach people to do is the private equity model. I'm the only person literally in the world that teaches the private equity model. So we teach you how to go out and raise money. And just like Wall Street, get paid up front. We receive $10,000 per property up front on every transaction, and we show you how to structure it where it's not a security. So I get paid before I buy, and everybody else is hoping the deal will work and they'll get paid at the end. The problem for a lot of people, especially if you're starting out or you want to grow your business, is you need money in the short term. Heck, let's not be esoteric about to grow your business and set up your systems. You need money to eat and pay your own bills first. Then to grow the company, set the system, all that. So we teach you literally, like I learned from Wall Street, to get paid day one. We have a great lady, Trisha Rockwood. She's from Michigan. She's been working with me for this year. So in 2019, not some ancient example, but 2019 this year, she's raised money and done placements on 61 property deals. So she made $610,000 in fees, plus she has half interest in 61 cash flowing properties. That's how we do the game.
You brought up a lot of points, and I'm trying to wrap my head around some of them because what you're saying is, I'm sure, to me and to a lot of our listeners, is somewhat alien and shocking. First of all, the fact that when you invest in real estate, it's just
the money and numbers. It's money and numbers. They work or they don't. Real estate's not about real estate. All it is. So I'm not emotionally involved. I mean, we have thousands of properties. I'm not emotionally involved with any of them. The only two I don't have for sale are the two that are my wife's. So our primary residence and our mountain home, those aren't for sale at any price unless my wife says so. Every other piece of real estate I've ever owned is always for sale. I'm not emotionally attached to any of them.
Okay.
You want to come and overpay for my office building, my bricks and mortar building, you can have it right now.
Well, you must run into resistance, though, from someone who might buy a house or a multifamily and rehab it and really spend a lot of their time working on it. What would you say to them? Or it's still just money?
There is nothing wrong with having a great sense of pride and fulfillment in your investment portfolio. I think it's great. And there's nothing wrong with having specific buildings or properties that your intention is never to sell it. We had a large building a few years back that it wasn't for sale. I had no intention of selling it. I was renting, and a guy came and realtor came representing a guy, and he wanted to buy it. And I said okay, and he gave me an offer, and he literally offered me 40% above what it was worth. And this was a very large commercial building. And I read the contract. I know the contract. It was a regular Arizona real estate contract, and so I signed it on the spot. And he's walking out, and I literally thought I was being pranked. I was waiting for the camera, and he's walking out, and he turned, he looked at me, he goes, "So John, what is it I don't know about this building?" Because they thought I was going to counter and back and forth, and I'm sitting there to myself, the value. That man obviously was very emotionally involved and wanted my building. He coveted it, and he paid a large price. But when I talk about it's money and numbers, it's like, look, I'm not going to get emotional about it. All the properties are just silly investment properties. And I have all aspects of the real estate marketplace. We mainly do single family homes because they make more money. If apartments made more money, we'd own more apartments than we do. If commercial buildings made more money, we'd own more of them. Cash flow basis, single family homes managed properly make more money factually. And you can do the numbers over and over again.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. And their first month's management fee will be half off for all new clients who sign up between now and the RPOA's annual conference in February. Well, talk more about this concept of getting paid up front as a real estate investor, because I know from my own experience, and I know just from a lot of people, you invest and then you wait for the cash flow to come in and you wait for the appreciation. Very rarely have I heard of people getting paid up front. So go into a little bit more detail on that, please.
Yeah. So when I look at the foundations of how a business is run, there's a couple, if you were to take Harvard MBA and put it down a couple salient points, the first one would be you need a great idea. McDonald's proved the idea doesn't even need to be good because the food's not that good, but the model is great. So you have a great idea. And for everybody here that's doing real estate, you got a great idea. Real estate investing is a great idea. So that's actually number one, check the box. You did it. Number two, and this is always what's taught for real businesses. Number two, raise money. You raise the money before you go into business. You don't attempt to go into business without the money. It'd be like if I wanted to start a McDonald's store and so here's what I'm going to do. I'm going to see if I can wholesale some on a 60-day delayed closing, some hamburger, and then I'm going to get some sesame seed buns on a lease option, and then I want to do a no money owner financing on the pickles. And it's like, that's not how real businesses work. Not that all those things aren't really good and cool. They are. But that's not the base of the business. I always looked at all those creative deals, which we've done almost 500, like 492 owner finance subject to type deals I've done in my career. Those were just the extra deals, almost like free ones just fell down because you've been doing all the other work. But the real deals are bought in the real way with real money. So first thing is great idea, real estate. Second thing, raise the money. Third thing is have a system to monetize, meaning you have to get paid up front for your business to survive. And all these things translate to real estate. For those of you that are listening, and especially for those of you that come in to the conference in February, we're going to really instill in you that you are not a real estate investor. You are the owner. You are the president or the CEO of a real estate investment business. And we're going to teach you how to start acting like one. Most real estate investors don't even acknowledge they're in business, and they wonder why they fail so massively. It's a shame. It really is when I see what people are doing, taught the same regurgitation I was taught that doesn't work very well, quite frankly. And so what we do is we teach you how to reach out initially to your sphere of influence, how to structure it under a JV model. So it's not a security. You can do it as a security. It's just a little bit different documentation and a little more money up front. Most people start it on a small, well, actually a no budget. And so we do a JV agreement, A business is formed. That business intent is to invest in real estate. One partner is the capital investor. That's the one that puts up the money and or signs for loans. The other partner is the managing investor. That's you. The managing investor for each property acquired receives a $10,000 fee up front, just like every other money professional on the face of the earth. So one of the things I want people to get is like, look, just because somebody who doesn't do it right told you how to do it doesn't mean you need to do it that way forever. You can actually grow your business up today and move up to where the real money people do on the face of the earth, which is get paid first, because nobody at Wall Street works for free. We get paid first. You get a $10,000 fee. Then you put the property together. And then we teach you, we take what you already know and we grow and expand upon that to teach you how to get the properties really great long-term cash flow. Most people who invest don't want to do short-term. They want to do long-term. If you think about your money partners, people may have done short-term deals with you, but it's really not what most of them want because, first of all, it's 37% maximum tax bracket plus your state, so they're paying 40% of their profits, so that's not good. And then you tell them you want to flip houses. Well, think about that word, flip. Most people are afraid to flip an egg because it might break, and you want them to flip their fortune. And most people who invest what they want today, if you have money, what you want today primarily is safety and security as your primary emotional needs on your investments. And then you want to invest for the long term with cash flow income streams, because it doesn't do you any good to have money that's just churning and not giving you income streams when you're older and you have money. So one thing we teach is that we teach you to see through the eyes of the capital investor what their needs are, not your needs. He was a dear friend of mine, and it was I got to see him his last talk. I got to see him before he passed, Zig Ziglar, and was backstage and took my son because he'd never seen him from the backstage. And there's so many Zigisms, but my favorite was, if you help enough other people get what you want, you'll get everything you want. So first we look at, for our residents, what they want, which is long-term home ownership. Then we look at our capital investors. They want safety. They want security. They want long-term. They want the cash flow. There's some other needs they have that we cover. And when I give both those parties, the resident in the property and the person who put up the money, when I give them everything they want, man, there's so much left for us. Starting with a $10,000 fee, and then half of all the profits generated on the property for the lifetime of the property.
And what do you call that upfront fee? Is it just a management fee, acquisition fee? How do you term that?
Some people call it a placement fee. Some people call it an acquisition fee. And again, you got to step into the shoes of the capital investor, as we refer to them, the investor. They are big boys and girls. They're grown-up men and women. They have money and they've invested before. They're usually not using Wall Street as much for some various reasons that we cover in the course, but they've always paid a fee. Quite frankly, if you don't charge a fee, if not on a conscious, on a subconscious level, something is wrong. No one would do all this work for free. Nobody. No professional investment counselor would do that work for free. It's like, and so people just see, the thing is look, like everybody here, almost everybody here, I was not rich when I was born. I did not have, the silver spoon. My parents weren't rich, et cetera, et cetera. I had to learn to get my money and build it. And then I learned, before I became rich, I truly learned what the needs of very wealthy people were. And their needs were very different than mine. And how they looked at money was very different than me. And to help them to place their money, I had to learn to understand their needs before I had money myself. Does that make sense?
Yeah, that makes sense. And I also think that it's hard for a lot of people who wear the real estate investor hat to actually put value on their own time and efforts, and to translate that to a fee or a dollar amount that they should be charging for their services.
Well, we will teach you that in mass abundance. I promise you that. And if you ever come out and meet within Phoenix, it'll be unlike any other seminar you've ever seen in your life, because literally 50-60% of the audience has a large portfolio, and there'll be several what we call Century Club members, Burley Century Club members. And those are investors who have acquired, control, own, and maintain over 100 properties in inventory cash flowing. And so when you're around people who do it every day, all the time, for real, it's a completely different experience than hearing about it and then listening to the naysayers in the hallways in between. We always tell people, hey, like, just remember when you go to the bathroom, when you start to say it don't work, just understand the guy next to you probably has 50 to 100 properties.
Yeah, that's great to be in a room like that. So when you do come to Grand Rapids next month, you're going to be talking about the 7 simple steps that anyone can follow to put money in your pocket right now. Obviously, we want people to actually come and hear those 7 steps, but can you give us a glimpse as to what some of them are?
Yeah, the first thing we're really going to do, and what we're going to spend most of the time on, is I'm going to literally do the presentation that you would do to raise money verbatim. So the secret sauce, the really good thing, the brass ring, the stuff that they always say, you need to get my course to get it, I'm going to give it to you for free at the talk. So I'm going to go through the talking points. I'm going to go through the 7 talking points for why people make a decision to move forward. Because you got to understand, decisions are, so I am a master at studying emotions and psychology. People make decisions, Brian, they make them emotionally, and then they defend them with logic afterwards, especially the engineers. Sorry, guys. So we make our decisions emotionally, and the bigger the decision, the more the emotion. And you're like, well, what do you mean, John? Okay, well, if you got married, that's the biggest emotional decision you made. If you had children, that's the second biggest emotional decision, especially if you had them on purpose. I have 2 kids on purpose. Glad we did. Greatest blessings in my life. The third big decision is buying your own primary residence, your own home. For some people, it would be buying a car, because you're making these emotional decisions. Because obviously, homes and cars, you buy way more than you needed. I mean, you don't need a great car. You just wanted one emotionally, and so then you came up with all the logical reasons why buying the BMW was a good decision. You wanted it, you bought it. It's emotional. Well, people place their money in the exact same way. It's an emotional decision, and you need to understand the emotions. So I've been doing this for a long time. I owned a brokerage back in the crash of '87. We're literally, that Black Monday in October, literally the Saturday before, I did a very large case, a very large placement. And the mantra around the presentation was greed. You're going to make a gazillion rate of return. You're going to make all this money on your real estate. Well, that presentation, after everything blew up on Monday and Tuesday, on Wednesday, that presentation was dead in the water, because the presentation for anybody who had money had shifted from greed to don't ever lose my money again. Well, what a lot of people aren't realizing out there today, especially a lot of people even in the financial planning services, they're still talking about rates of return and rates of return and rates of return, which is what people who don't have money talk about. And the people who have money were so deeply emotionally scarred. And look, you got to think outside of your RIA, guys. Look, at the RIA, we are weird. We are not normal people. We are different. We are willing to take on this risk and these losses and still keep moving forward. Just like I don't go raise money at the RIA. Some people from RIA come to me to place. A lot of them is just they're older and it's like, look, I don't want to do this anymore, and I don't want to give my money to a kid. I want to give my money to you, because I know you know what you're doing. And we go out to normal, wealthy people, and we meet their emotional needs. And right now, their number one need, Brian, is either safety or security. For 75% of them, it's safety. For 25%, security. 90% of their decision to move forward with you or not with you is based on, did you meet that emotional need? And in most cases, that emotional need is on the subconscious level, not a conscious. I mean, the big crash for us now, that was back in 7, 8, 9. By 10, it had all washed out. Yet there's still more money, factually, in cash, in banks, and retirement accounts, and brokerage accounts, and money market accounts, and CDs. There's more money in cash than at any time in the world's history. While the stock market's going through the roof and real estate in most areas is super hot and valuable, yet more money is sitting on the sidelines than ever before. And the reason is people aren't out there hunting rate of returns. They're hunting safety and security, whether they know it or not. So what we do is I know where they're at. The talk we do today is not the talk we did in 2005. It's not the talk we'll be doing in 2025. The talks shift over time. Does that make sense?
Oh, yeah. Yeah.
Well, we got the core talking point. So today what we do is we meet the safety and security needs We then give them the long term because they don't want to make a bunch of decisions. They don't want to be in and out. They want to make one good decision and have it hold and stick. And then we give them cash flow. And yes, we give them a great rate of return, but that's not what it is. And just look, if you can't make it in Michigan and you're trying to raise money, please at least hear this. Don't ever promise anybody in this market today 10% or more, because 10% or above, that's agreed return, and that scares people who have money away. Now, I know if you don't have money, you want 20 or 40%. But the average investor that we're working with, they lost a third of everything by 10. So they had 1.8 million, it was down to 1.2 million. And I know my old thoughts would have been, well, if I had $1.2 million, I'd be happy. It's like, well, that's probably why God didn't give you 1.8 million, because you're not a very good steward. So they're great stewards. So we help them get back what they had. We literally, in a very short period of time, can bring back all the equity and then give them a cash flow number that was higher than they were making before. It's a very easy placement. And do people have the world calls them objections. I call them expressions of interest. You wouldn't object to my offer unless you were interested. But we go through that. We have a whole course that teaches you how to handle the common and the normal objections that people have, because I get them like everybody else. But we have a system to handle everything. We've been doing this for over 30 years. It's all a system. It's all laid out step by step exactly what to do. And we're going to show you at the conference how to do the big steps, how to actually do the talk. Literally, when I'm done, you can move forward and start presenting that day if you want to.
I want to follow up on some of the things you just said. And I know that the speaking and the training and the coaching that you do, that's not your primary vocation or gig or whatever. You're actually out there doing it, and you've touched on that. Like, you're raising money for deals. Can you talk a little bit about what you are doing as an investor and the type of money you're raising and what you're raising it for?
Absolutely. So I'm the founder and CEO of a private equity company that was formed in 1989. The longer one looks out, generally speaking, the higher their pay level. So I look at everything in 10-year increments. We do sphere of influence, friends and family type placements. When I was new, heck, if you had the down payment money and could sign for a loan for one or two houses, you were in. Today, that's changed because we've raised the minimum entries, which is normal as a business grows. Starting out, though, you guys listening, we're going to show you how to do the right presentation. We're going to make available to you the documentation and the follow-up recordings so you can go through them, and you can literally go out and raise money to your friends and family. Today, we work with a lot of accredited investors, what they call in the industry, they call it country club money, which would be $1 million to $5 million placements. I also work with a lot of institutional money. I represent some large hedge fund out of Eastern Europe. I also work with family offices, which is individuals that it literally usually is families, and they make they have on the low end $500 million, on the high end $5-10 billion. Most of them are $1 billion plus. Sometimes it's a few families combined. It's the family's money. They have someone that manages it for them, but it's their money. So we do a lot of placements with them. You'll find you're a very good match. There's actually some very nice, really great family offices in Michigan. We work with one of them there. Confidentiality doesn't allow me to disclose the name. And they do $20 million minimums. And most of you listening right now will never get a $20 million minimum. And there's one reason why and one reason only. You'll never ask for it. You make up all these rules that hoops you have to jump through before someone would work with you. And the reality is, guys, we were all at one point the exact same. None of us had ever done a deal. None of us had ever raised money. None of us had ever done it. And then we began our career and started. And I have many students who, within 20 deals, were working with institutional money. So they had a track record of 10, 15 houses and then literally went right to the institutional money, because it's virtually the same conversation, just a little more work to get in to make the conversation happen.
You really run the gamut of the type of private money that you're raising. What are you actually investing in?
Primarily, so we have holdings in 12 different states. We've also worked in a couple different countries. We mainly are working in our core market, which is Arizona, and it's not that it's like the super easy market. Quite frankly, the opposite. It's where we live. It's where my corporate office is. We do a lot of stuff still in the Carolinas and the South. We've done some in the Midwest, some more moderately valued real estate. Today, we're primarily doing single-family homes, off-market and on-market. When we're doing on-market, we're taking advantage of the financing and the extraordinarily high rents. One thing I learned in Wall Street that was a lesson that really is carried forward into markets like today. It's not the price, it's the return. So I get a lot of properties I look at, the price is too high. I'm sure like you look at, Brian, and people listening, because a lot of places the prices are just really high right now.
Oh, yeah.
And the price is too high, but then when I look at the numbers, when I take my emotion out around the price and I look at the numbers, and it's a long-term hold. So it's like, okay, well, the price is too high. However, interest rates are 4%. With a 20-25% down for an accredited investor. You don't have to sign for the loans, your investors can. It's one of the reasons we have so many people, guys, that are in the Century Club, Brian, is because I took the shackles off. Because most real estate investors, by the time you really know what you're doing, you've either ran out of money or the bank ran out of loan into you. So now you're out trying to find creative deals and hodgepodging money together anywhere you can. You know how to find a deal, but you don't have any money. So what we focused on was do the money. And then you can always do as many deals as you want because you don't have to sign for the loans. And obviously, it's way easier to buy properties if you've got investors who are paying cash and or putting down payments and paying for loans than it is to buy them off market with creative financing only. I mean, that works. It's just more work. It's harder. That's just the truth. And so we do a lot of single-family home portfolio. So single-family homes bought one at a time or bought in portfolios. A lot of those are overvalued right now, more than we'd pay. We have not in the last 2 years done a lot of mobile home parks or apartment buildings, commercial stuff, because the values just haven't been there. So I'm not stuck in what I want. I'm going to take what the market gives me based on my return requirements and my safety requirements, if that makes sense.
Yeah. What are your return requirements and safety requirements? And what are those the same for your investors?
Yeah. So with our investors, what we talk to them about is 6 to 8%, and then we deliver 12 to 14. I learned this as a little boy from my grandfather, who was a 3-star admiral, and he taught me a lot of things that stuck with me forever. I was very blessed to have 2 strong male authority figures in my life, my father and my grandfather. And, what he taught me was like, grandson, when it comes to money, you want to always overestimate your expenses and you want to always underestimate your returns. That's why all your surprises will be good. And so what we do is we undersell the return because I understand it's not the return. I get when you're new. I mean, when I started my first 7-8 years in this business, I thought it was about the return. And I didn't realize how much money I lost and wasn't able to place and people I did not get to help because I gave them a return number that was too high for them to take in. Does that make sense?
Oh, yeah. Yeah. I mean, some people get very skeptical if your return is over, say, 8-10%.
Yeah, you go above 10. So I just tell people, look, promise them 6 to 8. And then when you show them the model, and we have a diagram that we teach you to draw, when you show them the model, they'll go like, wow, John, I mean, you were talking 6 to 8, and this is just a normal deal, and we're making 24, and I'm getting 12. This is way better than what you promised, John. And that's how you want them to always do. They want them to believe. So when I round numbers, I always round them against me, up or down. So they're the whole time going like, wow, this guy's a straight shooter. That was 5.8%. He didn't round it up to 6. He called it 5. I want this guy placing my money for me because I can trust him. And so we buy all aspects. Seminar land, especially in smaller, lower priced areas, seminar land, that's what I call the seminar world. And we've all been to a bunch of seminar land. They're usually a lot of fun. They're really entertaining. There is some great core ideas that are taught, Brian. But the reality is when you walk out of the door, a whole bunch that was taught at seminar land doesn't work in the real world, especially if you're on, the free evening previews that are all over the country right now. I mean, they tell you that go out and make offers at 80 cents on the dollar on MLS, which may work where you live, but doesn't work in any big city in America. I mean, you can't do that in Seattle or Phoenix or Los Angeles. No offers are accepted off MLS on any decent property for 80 cents on the dollar. 6 years ago, of course, all day long. In 2020, no. Okay, so you got to adjust with the market is. You got to be in the real world. So we refer to what we do real world. And the real world, in many markets, there's too much pressure to be buying the bigger transactions today. So we've got a onesie-twosie for the most part right now. Here in Maricopa County, which is the fourth biggest city in America, we were one of the top 10 buyers in 9, 10, 11, 12, 13. And we bought with an extraordinary vengeance, which is what we're going to be teaching you guys at the end of the day. I'm going to teach you a business model. And you don't know if a model is a real model until it has gone through a downturn cycle. People ask me about, John, have you heard of so-and-so? She's this new lady or this new guy that's teaching. It's like, no, not really. Well, you should check them out. Well, not really. I'll get back and I'll check them out after the next crash. Because I only know if someone's model works if they have not just survived but thrived through a crash. And a lot of them were very good men and women. I know, Brian, you would have known them, and I'm sure we know a few of the same people. Most of the real estate investors went out of the business or lost almost everything in the downturn. Our company thrived and actually made more money than at any time than we've ever made in our history, but we were positioned for it.
Yeah. So how were you positioned for it?
I understand fifth grade math. No clairvoyance, no circle ball, no I know because I say I know, because anybody who tells you they know is lying to take your money. Nobody knows the future but God and Jesus Christ. I always tell people, hey, I'll say in Michigan, hey, if God or Jesus is telling you, then please meet me at the break and I'll quickly ascertain whether I'm talking to a crazy person or an actual prophet, and it's always been a crazy person. Because nobody knows what the market's going to do for sure. We can look at history, we can look at trends, but it was fifth grade math back then. It was very difficult in most markets to buy a property with a normal down payment and the normal interest rate and the normal runs and have it be positive cash flow, yet alone meet a rate of return that we required. It was fifth grade math. I don't do balloons. Balloons are for clowns. I don't do teaser rates. I don't do interest only. I don't buy for appreciation. I buy for income stream today. And fifth grade math in 4 or 5 and then in 4 and 5 pushed me out of all the vibrant markets in America. Fifth grade math saved me. I didn't even need to do division. I just needed to understand that, wow, this house I used to make $400 a month on, and now this house I make $50 a month on, which means I lose money after expenses. I'm not buying this house anymore. So it's just fifth grade math. You have that today in a lot of markets. There's just a lot of properties that aren't making sense that used to make sense. The saving grace for us today is high rents, low interest rates.
Yeah. I was going to say, well, what does your fifth grade math tell you about today's economy?
Caution.
Where are you right now in your buying cycle?
We are in moderate with caution. What I do, and it's the same thought process you should have if you're buying your first house. My sole responsibility of the CEO of a private equity company is to reduce and mitigate risk. It is not to make the greatest profit possible. It is not to go to Vegas and roll the dice. That's not how real money people make their money. We design a model that's extraordinarily low risk. We then do everything we can to mitigate that risk down. And by doing that, we get the highest possible returns because we don't have the losses and we don't get wiped out in normal cycles. And the market cycle, look, ups and downs should be no surprise to anybody that would trade without emotion. Every 10 to 14 years, with very few exceptions, the markets go through a full 4-stage cycle, repeatable, literally going on charts back 6,000 years on planet Earth. They go through growth, prosperity, recession, depression. Growth, prosperity, recession, depression. You get some markets in the Midwest where the markets don't move much, so there's not much of a variance. Bigger cities, higher population, there's a lot more wild variances. The longer the run, the bigger the down. Big crashes like happened, depending where you live, the 7 to 9 era, because different towns and different states crashed in different times. Those are 65 to 85-year occurrences that you can look at charts and measure. Could the next one, 20 to 22, could it 23, could it be a big one? Absolutely. However, there's no historical precedence for it. It's because it's never happened before in 6,000 years. We've never had back-to-back major crashes in history. It could, but there's no precedent for it. When people say it's going to, it's like, okay, well, that's your opinion. Opinions aren't facts. That's something that the media has taught us to forget. But all of us listening right now, we all have common sense, right, Brian? We know that opinions aren't facts. They're just opinions. That's all they are. And So I weigh all the evidence I look at the market with caution, as any professional money manager should. But we're nowhere near like it was 6 and 7. There's not funny money floating all over. There's not financing available for people who shouldn't own homes at the price they're doing. And it wasn't so much of the downturn. It wasn't that people shouldn't own homes. It's that they should have been able to get a $200,000 property in my market, and they were given a loan for a $500,000, which they never, ever could have paid for, even if the market had gone up.
Yeah. Yeah.
So a lot of common sense. And, we're buying. And, the students that we teach, they're actively buying. We just teach them exactly. So we got to look at it a little differently now. It's not 2013 or 14 where it was a little easier to get value because things are tightened up. So now it's like, I don't want to buy all of Phoenix. I don't even want to buy all of this one subdivision. However, within that subdivision in Grand Rapids where you're at, you don't want to buy Grand Rapids, and you don't want to buy all of the subdivision. But there are several homes within each subdivision that you'd like to own. Those are the ones we go after. We go after the ones that are going to get the maximum income stream, that are going to give us the most value for the money. And I'll teach you how we do that.
All right. Well, I'd like to switch gears here
Sure.
before we wrap it up. You're also a best-selling author. Can you talk a little bit about the books that you've written, and as well as one of your famous co-authors?
Sure. We've been very, very blessed. And I think blessed is my nice way of framing. People go, you sure got lucky. Yeah, decades and decades of extraordinarily hard work. That's luck. We call it being blessed. I've written several books. The main one that I wrote was Money Secrets of the Rich. It actually sold over 1.5 million copies. And I give 100% of all proceeds from the book to charity. So it's Money Secrets of the Rich by John Burley. Go to Amazon or whatever and order it, and all the money goes to charity. And we go through on that, the money stuff. I think we're talking about a real estate convention on a real estate show, Brian, but actually how the world has always looked at me is I'm the money guy who happened to make a lot of money in real estate because I understand money and what that's about first. And then the real estate came a lot easier, if that makes sense.
Yeah.
And I came at it with a very different perspective. And that literally is a book. It's got 30 chapters, and each chapter is designed for a day. So, this is how you set up an automatic investment plan. This is how you pay off your debt in 3 to 7 years, including your personal residence and your cars. Rich people don't have financed homes, people. There's good debt and bad debt. The good debt is investment debt that pays for itself. Bad debt is all their debt. Consumer debt's always been bad, always will be bad. Jettison it. Some people go like, oh, I need $10,000 a month, to be free. And it's like, well, if you paid off your house and your cars, how much a month do you need? Oh, well, I'd only need $6,000 then. Okay, well, then let's put together a two-pronged approach. Let's build up your income streams from real estate, and let's pay off your bad debt. And then you'll have peace of mind. You'll have that. So it's a lot of money stuff. The first, it's in 3 chunks. We go through the first chunk, how to fix today. The second chunk is how to build tomorrow, and the third chunk is how to set up that legacy for your family. And it's sold 1.5 million copies. It's a great book, Money Secrets of the Rich. I've co-authored books with a lot of people. I think the one you're referring to is I wrote a book with Citizen Donald Trump back in 2006, Wealth Building 101. I think it was a little over 1.5 million copies, and it was a great experience. And it was just going through the money. I don't know him really, really well. He wouldn't take my phone call. If I called him, I'm sure, because I never knew him that well. I did have a couple conversations with him that were very interesting, very unique belief system. And you can't, you can have whatever opinion you want, but you can't question the amount of money that he created for his family. And a lot of stuff floating around. What it was is like, well, if my parents were Donald Trump's, I'd be rich. Here's the fact: at their peak, his parents were worth $22 million. The most conservative estimate that anybody has is he's worth $5 billion. It's quite a bit more than that. But I know how people go because it's just our nature as human beings. We just go right to those bad emotions. Like, well, if my parents had been rich, I'd be rich too. Okay, well, we'll take a couple zeros off. If your parents were ever worth $22,000, that means you're worth $5 million. Where's your money? So he had some great belief systems around money. He certainly made a bunch of money.
Can you share any of the interesting conversations you had with them? Yeah,
the one I can certainly share is when I meet people who are profoundly successful in their given trait. And look, he's like every single one of us. He's a very flawed human being. To me, it's very sad, the state of America, that we have a a small percentage of the population, and that's what it is, a small percentage, and the media that just wants to roast everybody alive. I just shudder when I think of the precedents, because this is exactly what's going to be for every president moving forward. It's not going to change regardless of party. It's going to be the same thing, just the other side will do the same thing because they're basically doing the same thing. Yeah, I asked him about when I meet somebody who's very successful, I'd like to ask them a profound question so I can value from it. Everybody go like, well, what's it like to be rich? It's great. Next question. And so I asked him, what was his psychology? What was his belief system? Because again, to me, this is so much about one's own psychology and emotions. I asked him, what was his psychology and his emotions, his belief system around money? And he's like, he pondered and he thought, and he told me, John, this is an interesting question. I knew at a very, very young age, he was actually with succinct clarity. I remember at 14, knowing in my soul, I'd be a decabillionaire. And I was like, whoa, knowing in your soul. Okay, that's congruency, folks. And put aside any political beliefs or personal beliefs about the man. He knew in his soul that he was going to be that wealthy at 14. He's always extraordinarily grateful for his parents giving him a great upbringing, as am I. Not that kind of wealth, but as am I. He was extraordinarily grateful for his parents paying for his education. There was always massive gratitude towards his parents. He started out, if you don't know, guys, he started out buying FHA foreclosed apartments in Brooklyn and renovating them, kind of following what his father did. And then he said, screw that, and he upped it to a level that, well, in America, we'd never comprehended in modern history on real estate what he did. Like him or not, that's irrelevant. And so he was just very congruent with that belief system around money. And then laughingly and jokingly, as we talked about, he wished he'd made the number a lot bigger, and he wished he'd made it when he was a lot younger, because he believed, as I do, that was all in his mind. If he had said 50 billion 10 years earlier and had that congruency around it, he would have done what it was needed. Because that is how money works in a large degree. And I know if you don't have money, that's not what you want to hear. You want to hear there's some magic wand, and there isn't. There is no magic wand. You get a great model that's proven, that's worked over and over again, that follows the rules of running a business, and you work the system. And I promise you at Grand Rapids, when we're up there in February, guys, I will be ready to take lots of notes. I'm going to speak really fast because I'm going to try and shove twice the content that I have time for. One thing that's unique, I will be there early and I will stay late. And most times when I only go out, literally a handful of times a year is all I do, Brian. And that's the truth. That's just what it is. Because what my students, and this is just profoundly humbling to my wife and I. We have more students who are Century Club members, that's 100 properties in portfolio, than anybody who has ever taught in the world. Yet there's guys out there running 3-4 events every weekend. And we run 3 or 4 events every year. And I have more high-end success stories than anybody else does. And the reason is we took the shackles off. We teach you the true model, and then we show you how to grow and expand your beliefs and your psychology, and then we put you in an environment of other people who are doing the same thing. But at the end of the day, guys, and you're not going to hear this very often from anybody who speaks, this is work. There's no magic wand in life. There's no shortcuts. There's no easy ways. There's proven models that require work. Most people start this part-time. In fact, in the beginning, I'm going to teach you the model that we do, and I'm going to ask 4 hours a week. That's all I want, 4 to 5 hours a week. You're going to make 5 phone calls. You're going to do 2 presentations exactly how you're taught. And if you do that, on average, somewhere between 30 to 90 days, you'll receive your first placement and your first fee of at least $10,000. If you will do what you're told. And that's going to be the decision you'll all make at the conference in Michigan.
All right. Well, on that note, John, I want to thank you for being on the show, and just remind our listeners that you will be a featured speaker at the 2020 Michigan Landlord and Real Estate Investor Annual Conference and Expo right here in Grand Rapids, Michigan. And it's next month, February 27th through 29th. And you can go to rpoaonline.org. And for those who have come to the conference in the past, it's a lot of great speakers. And John, this is your first time at the conference, isn't it?
Yes, it is. I'm really, really excited. And hey, if you're listening in, please come up and shake my hand. And seriously and genuinely, I'm known for this. I will be there early, and I will stay as late as you have questions. And I mean, many conferences, we only do the handful a year. Many conferences, I'm there at 11, 12, 1 o'clock in the morning, still answering questions when everybody else has gone to bed. I love the business. I love to give back and help on this. Our really successful students, they would tell you the good and the bad thing about me are virtually the same. The good thing from a student is that I actually do this for real today. We're literally one of the largest investors in the country, and certainly the largest that speaks at clubs. We actively do it. We know what we're doing, and it works. And that's also the bad news. Because I actively do it, and I know what I'm doing, and it works, I've got to be fair to the thousands of families that depend on me to provide for them. And so my job, what I do for a living, is I run a real estate investment company. I don't educate. So it's a part-time thing, but I'm super excited to come out. It'll be my first time out to Grand Rapids, and I'm really excited to see you guys. Please come up, shake my hand, and have as many questions as you want, and I'll sit there and I will answer them all night long. I love to help out, and I love to answer the questions. I love to see people's eyes when they get it. I know you know what I'm talking about, Brian, when that you can just see in their eyes, something clicks and now they got it.
Oh, yeah. It can really be exciting when you see that. John, I've really enjoyed this conversation. And as a private money raiser myself and someone who puts together deals and brings in investors, I can't wait to hear you speak and find out how I can up my game. And I've really enjoyed this conversation. So thanks for taking the time.
I have well, Brian. It was awesome, and I look forward to meeting you. Maybe we can grab a bite to eat when we're out.
I would enjoy that. We'll do that. I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.